This is your LMAX Exchange Technical Update for Monday, November 7th, 2016. Euro dollar. So the euro has rallied back significantly over the past several sessions, but the overall market is still seen correcting within a broader downtrend. A lower top is now sought out ideally in the 111 to 112 area, which offers itself as a strong confluence of resistance in the form of some previous support and some moving average resistance in the 50, 100, and 200-day moving averages. At this point, really only the establishment back above 112 would compromise or delay the structure, and ultimately a lower top is sought out ahead of that next major downside extension back towards the recent lows that we saw down at 108.52. Sterling dollar. So cable is finally seeing a nice little correction higher, and the market could still run up towards some next key resistance in the form of the previous base around 128. It would take, though, a clear break, an establishment above 128 to force a shift in the structure, and overall the pressure still remains on the downside in favor of a lower top and fresh downside extension back towards those recent 31-year lows all the way down around 120. Dollar yen. So dollar yen continues to be very well capped on rallies, most recently above 105, and there is risk now for additional declines back down towards the yearly low in the 99 area. At this point, it would take a break back above the recent highs that we saw around 105.55 to negate this outlook. Euro Swiss. So Euro Swiss is trading down at the lower end of the range. It really compromised that range, trading below 108, but overall it's still confined to that range and could once again see a bounce off the range lows back towards the 110 range highs. However, if we do see the establishment below 108 this week and the market continues to trade lower, it could open the door for an acceleration towards the 2016 low at 106.24. Aussie dollar. So Aussie has been bid up in recent trade, but the market continues to be very well capped into rallies, and overall we're seeing a bit of a choppy consolidation. At this point, look for rallies to continue to stall out above 77 in favor of that next downside extension, major downside extension below key support, which comes in around 74.21. Dollar CAD. So dollar CAD continues to be very constructive with the market pushing higher and higher to fresh multi-month highs. The risk now is for additional upside into the 135 to 140 area. If we do see any setbacks, they should be very well supported above 130. Kiwi dollar. So Kiwi has rallied up into some key internal resistance, which comes up around the 74 area. The market ideally should stall out somewhere ahead of 74 in favor of that next lower top and fresh downside extension back towards the 70 handle. At this point, it would take a break back above the 2016 peak at 74.86 to compromise this bearish outlook. SPX 500. So the S&P 500 has continued with its declines. The market has put in consecutive daily declines, and after breaking below the September base last week at 2108, this opens the door for a retest of the 1990 low from June. At this point, the market is now testing the 200-day moving average in the 2080s, and there could be risk for a bit of a bounce, but overall the pressure remains firmly on the downside, and again, a retest of that 1990 June base is on the cards. Gold. So gold is finally pushed back up in recent days after a breakdown that we saw earlier in the month of October that took us down into the 1240 area. At this point, look for a higher low at that 1241.45 higher low that was seen back in October in favor of the next major upside extension beyond the 2016 peak at 1375.